Hey, it's Matt Decker with Leverage Wealth Management. I am doing another product review today. This one is on the LSW Peak Life product, which is one of the more requested reviews that I've received. And first things first, if you haven't watched some of my videos on how to properly design these products, how to properly structure them, you should check out those videos first. I'll link them in the description below. And the reason being, that's more important than the product that you have. So making sure that the policy is designed the right way, that is by far the most important thing when it comes to purchasing an index universal life insurance policy. The product actually comes second. So start there, and then once you've got a chance to digest those videos and how it should be structured, then you can come back and start watching some of these product reviews that I'll be rolling out on a continual basis. So this is the LSW Peak Life product. It's the best product that they have for cash accumulation and income. There are some caveats with this particular product though. It takes a relatively large premium to get into this product, especially if you're in your late 40s or 50s, early 60s, because the minimum death benefit is $1 million. So you can't even get into this product unless you have $1 million death benefit, which makes it a little bit more expensive. It takes a larger premium to get into this, but it is the best product that they have, and I relatively like this product. It's one of, I'd say, the better ones out there. It's certainly in the top 10, and we're just going to kind of go through some really simple things that you should know about this product before you purchase it, or if you've already purchased it, or if you've purchased the Flex Life or the Flex Life 2. Those are the other iterations of this product that will be sold in lower death benefit amounts. If you have any of those products, there are just some things that you need to know about it so that you can use it the right way and so that you can kind of make sure that you're mitigating your risk. Let's put it that way. So the first thing that I just want to touch on are the fees in this LSW product line. So the Flex Life 2, along with the Peak Life, it's comparable to the rest of the marketplace in terms of its fees. It's average to above average. And by that I mean it has average to above average fees. So it's a little bit more expensive than some of the other products that are out there, but not much. And there's actually a reason that it's a little bit more expensive, and we'll get into that in a second. So fees, I'm good with. The fees are comparable to what else is out there. I would say probably the biggest thing that you need to key in on with this particular product is actually going to be its loan provisions, okay? So the LSW product line for the longest time, and this is going back years, has really been focused solely on what's called a variable participating loan or a variable loan provision. Now, this is important because the way that you get money out of these contracts on a tax-free basis is by using loans. You loan yourself the money is still growing inside your policy, and so you have the opportunity for what's called positive arbitrage. I tell people all the time, if you could walk into a bank and you could loan money out at 3%, but you could invest that money in a CD at 4%, how much money would you borrow from the bank? And most people think about it and they say, well, I'd borrow as much as I could. And of course you would, because you're making money on what you're borrowing. So you can do that in life insurance policies. But what's important about this particular policy is this variable rate that is probably the most prevalent policy option that the LSW product line uses. The variable rate shows you a projected interest rate that you will be charged based on today's rates. Now, the basis is the Moody's corporate bond yield. And if you do any research on the Moody's corporate bond yield and you kind of pull up a chart, you'll see that it's actually near historic lows. Okay, so the rate that they're showing that you can borrow funds out of your life insurance policy is near historic lows. The one problem with this product is that variable rate looks really, really good on paper because they're projecting a historically low loan rate for the life of the contract. But that's not so realistic. In reality, that loan rate is uncapped and it floats with the Moody's corporate bond yield. So you don't really know how much they're going to charge you to access your money in the future, potentially, if you've chosen that variable loan rate. Now, some of their products only have this variable loan rate. It's the only provision that they have. You either choose a wash loan which is basically giving up your interest crediting, or you choose a variable loan rate. 90% of the policies that I've seen over the last 10 years from LSW have been using a variable loan rate. And I find that a little bit scary because you have no idea what the company's actually going to charge you to access your money in the future because the rate is variable. It would be similar to today in historic low interest rate environments, near historic lows, even if you look at the real estate market. So rates have ticked up a little bit, but in the long run, I mean, rates are still really low, even in the real estate market. I don't know anybody that's going out there and purchasing a 3-in-1 or a 5-in-1 or a 7-in-1 adjustable rate mortgage. Nobody's doing that. They're all locking themselves into 15, 30, 20-year fixed mortgages. Why? Because you know exactly what you're going to be charged. You don't want a variable rate because you don't know what that rate's going to be in the future. People got killed doing those variable rate mortgages several years ago. So that's what LSW is doing inside their policy. Their main policy loan provision is a variable policy loan, meaning it looks good today because it's at historic lows. And if you project your income using that variable loan rate provision, it looks really good. The problem is you don't know what they're going to charge you, okay? So enough on the variable loan rate. If you have specific questions, get in touch with me and we can kind of go through that and we can look at your policy and see exactly what provisions you have. They recently have added what's called a fixed participating loan. In my opinion, that provision is much, much, much better than your variable loan rate because they tell you exactly what they're going to charge you no matter when you access your money. It's much less risky. It's much easier to project your income using a fixed participating loan rate. Now, the one caveat and the one thing that they do that I don't love is when you choose that fixed participating loan rate, they now dictate how your money is invested inside the policy, okay? So if you have an index in your policy that you really like, you no longer have the control to choose where that money is invested. They now choose. So I don't love that. There are a few companies that have kind of taken that route, and I don't love that provision, but their fixed participating loan is certainly safer than their variable loan rate. The variable loan rate, you don't know what they're going to charge you to access your money, and that's kind of scary. The other thing that I want to mention is their crediting. So the other knock on LSW specifically is that almost all of their index options, I think all but one, are entirely S&P based. So there's not much diversification that you can build into your index universal life insurance policy if it's with LSW, because nearly all their options but one are solely based on the S&P. So, I don't love that. It's an okay index, and it's probably the most popular index that people use regardless of the company. Most people are in the S&P, but there are so many other carriers out there that give you diversification in terms of the different index options that you can choose. Some people will let you put money into the Russell, into the NASDAQ. They'll let you do things like blended indexes that are diversified already. There are volatility controlled indexes. So LSW has none of that. Essentially, it's just S&P based. The other thing about their crediting is a lot of their older products have seen a severe reduction in their policy caps long term. So they haven't maintained a ton of cap integrity on some of their older policies that they've sold in, I'd say, in the last going back 4 to 10 years. Some of those policies have seen a big reduction in their caps, which is harmful to your policy performance. Obviously, if your caps are going down, you're capturing less of the market upside. Your policy is going to perform worse in the long run. So I don't love that about them either. But the thing that LSW does that's really phenomenal is these living benefit riders. So they have all 3 living benefit riders. Not very many companies have all 3 living benefit riders. And those 3 riders are terminal illness. It pays your death benefit early if you're terminally ill. It has chronic illness. It gives you a portion of your death benefit early for things like, think like a long-term care episode. If you're confined to a facility, the trigger is actually if you cannot perform 2 of the activities of daily living, 2 of the 6. So those are bathing, toileting, transferring, clothing yourself. Those are like the activities of daily living. So if you can't perform 2 of those 6, it starts paying you your death benefit early. So think of it as like a pseudo long-term care policy replacement. It's not true long-term care, but it can cover some of those expenses. And then the third one is critical illness. So it actually pays you your death benefit early, not all of it, but some of it, for things like heart attack, stroke, cancer, paralysis, severe burns. And so those are 3 really unique benefits. They're one of a handful of carriers that offer all 3. And that's primarily the reason that their fees are a little bit higher than I would say the average. They're average to above average in terms of their fees. And the reason that they're a little bit more expensive is because they offer all 3 of those living benefit riders, okay? So all in all, this LSW product line, and I'm talking mainly about the Peak Life, the Flex Life 2, and the Flex Life. They're all very similar. There are minor differences between the 3. The Peak Life is the best of the 3, but again, it requires a higher premium to get into it. Those 3 are good products. The things that you need to watch out for are the variable loan rates, and if you're looking for something that gives you more diversification than just the S&P, those 3 products are not going to deliver that for you. So those would be the knocks on the LSW product line. Now, I will say this. LSW has several other products. There are 2 or 3 that they've sold in the last 4 to 10 years that are actually really, really bad. They've seen a huge reduction in their caps. Their crediting rates are near the floor. Those products should probably be seriously looked at. So if you have one of those older products, it's not a Flex Life, it's not a Peak Life, it's one of the others, you might consider going over that with me, because those products can almost always be improved because they were priced poorly, they've seen a reduction in caps, and they're just not performing the way that they should. But those other 3, as long as they were designed the right way, which I said at the beginning of this video, that's the most important thing. The most important thing with your index life policy, if your goal is maximum income, maximum cash, if that's your goal, the most important thing is that it was designed the right way. And by designed the right way, I mean that you're working with a good agent who is reducing their commission to the minimum that the IRS is going to allow while still providing you all those great tax benefits that we know and love with life insurance. So that's the most important thing, that you're working with a good agent that knows how to design these policies, that's putting you first, the client first, in order to max out your cash, max out your income. That's first and foremost what you should be concerned about. And second, this is a good product line. It's not the best. It's certainly not the worst. It's definitely in the top 10. They do have those 3 living benefit riders, which is a great benefit. And there are just a few things you need to watch out for, which I've outlined in this video. So let me know what other products you want to see me review. Let me know what questions that you have. It's tough to do a review on LSW because they've got 3 different products that are all pretty much the same but have slight differences between the 3. So I chose the best of the 3 and just did this short video on that one. So if you haven't done so yet, please like this video, subscribe to my channel, and let me know what else you want me to tackle in the upcoming weeks and months. Take care.